Hey guys, welcome back to Stock Tricks with Nick. Today we'll be going over how you can use the app Credit Karma to track, understand, and build your credit score. I initially got the app just to monitor my credit score, but the more time I'm on the app, the more I see it has to offer. I'll go over all the additional benefits that Credit Karma has to offer in a different video, but since its main function is free credit monitoring, we'll cover that today. Your credit score is a metric that tracks how risky you're perceived to be to loan money to. I say perceived because some of the factors that lead into your credit score don't make intuitive sense to me. The scores range from 300 to 850, with the higher score being better. So how does having a higher credit score impact your life? The major benefit is when you take out a mortgage to buy a home. If you have excellent credit score, the bank sees you as less risky to default on a loan. And because of that, they can offer you a lower interest rate. But how important is it to lower your interest rate by just 1%? Incredibly. A 30-year mortgage on $300,000 with a 4% interest rate will land you monthly payments of $1,432. But with just a 1% increase to that interest rate to 5%, your monthly payment jumps up to $1,610. Over 30 years, this is a $60,000 difference. Do I have your attention yet? But home mortgages aren't the only thing that an excellent credit score can get you. The same logic applies to any type of loan you get, whether it's a car loan or a personal loan to pay off either credit card debt or refinance your student loans. Talking to you millennials. Besides loans, a higher credit score makes it easier for you to be accepted to get credit cards, including those with higher limits, better sign-up bonuses, and better rewards. Having a higher credit score also gives you better odds when you apply to rent. And, depending on the state that you live in, a higher credit score can actually lower your auto insurance premiums, as some actuaries have proven a correlation between a low credit score and the probability to submit a claim. Now let's go over how your credit score is actually calculated. You have your payment history, credit card utilization, age of credit history, total accounts, and hard inquiries. First, we have payment history, and this is the largest impact of 35% of your score. This is calculated by taking the total number of payments that you've paid on time and divided by the number of payments that come due. As you can see from the app, a 97% score is actually very bad, and a late payment stays on your credit report for 7 years, so you must pay these bills on time. If you just had one credit card for a full year and missed a single payment, your score would be 11 out of 12, or 91.7%, which is terrible. But say you had 5 credit cards for that year and just missed a single payment. Then your score would be 59 over 60, or 98.3%, a much better score. One way I make sure all my bills are paid on time is just by enrolling in autopay using the Chase app. Besides that, I also set reminders on my phone just to make sure those payments went through. When it comes to payment history, I got good news and bad news. Let's go with the good news first. If you're late by just a couple days, it's not going to count as a late payment. You have to be late by 30 days or more for it to be counted. And for the bad news, the longer your payment goes past due, the worse it is for your account. So one that's 60 days overdue is worse than a 30-day, and ones that are 90 days are worse than a 60-day. So if you do have any late payments, make sure you pay those off immediately. Next, we have credit utilization, another main driver that makes up 30% of the score. This one's counterintuitive to me because they don't just use the credit card balance. They use the credit card balance divided by the credit card limit. This means if I used $5,000 on a credit card with a $50,000 limit, my credit utilization would just be 10%. But that's viewed as less risky as someone who uses $500 on a card that has a limit of $1,000 or a 50% credit utilization, even though the first person was using 10 times the amount of credit. So let's go over how we can optimize this metric. We can either make the numerator as small as possible, that credit balance, or we could take the denominator and make it as large as possible, the credit limit. Your credit score puts the most weight on each individual credit card's utilization. So it's important to spread out your expenses so they don't all go onto one card and really drive up that utilization rate. Personally, I spread the expenses out to the cards that will bring me back the most rewards. So I use my American Express for groceries, my Chase Sapphire Reserve for travel, food, and drink, and my Chase Freedom card for everything else. Now let's go over how to increase the denominator of this metric, the credit limit. But before that, I need you to promise me that with a higher credit limit, you're not going to be adding any more expenses to your card. Otherwise, that destroys the whole point of this. First thing you can do to increase your credit limit is simply get more credit cards. Each credit card's limit will be added to the total limit, and by keeping your expenses the same, your credit card utilization will drop. The other way to increase your limit is to simply ask. Many credit card companies will have a place online that you could request a credit limit increase. And if you've been with them for a couple months and have paid all of your bills on time, they should honor that. For other cards like Chase, you have to call or go in to get your credit limit increased. Like I said earlier, the better your credit score, the easier it is to increase your credit limit, which also improves your credit score, which makes it easier to increase your credit limit. See how this is a cycle? Once I realized that credit utilization played such a big role in calculating your credit score, I took the same 2 steps. I opened up 2 credit cards, American Express and the Sapphire Reserve, and I asked that my credit limits be bumped up on the 2 that I had before. By taking these steps, in just 2 months, my credit limit went from $16,000 to $74,700. Next, we have age of credit history, which makes up 15% of your score. This looks at the average of all the credit accounts that you have, including your loans. This is why it's so important to start building your credit right away, because no matter how responsible you are with your credit cards, this is a metric that's just going to take time to improve. If you're going to close out a credit card, make sure it's not the oldest account, because by doing so, you're going to lower that average age and decrease your credit score. One thing I do is every 3 months, I'll use my oldest credit card just so they keep the account open. One unfortunate thing about paying off your student loans is once you do pay them off, they drop off your credit report, and that's going to drop your average age. Next, we have total accounts, and this only makes up 10% of your score. Lenders want you to prove that you can handle multiple credit accounts responsibly at the same time. Personally, I only have 4 credit cards right now and no loans, so this metric does ding my score, but this is a low impact. So don't just open up 12 cards to bump up this part of the score. And finally, we have hard inquiries, which makes up the last 10%. A hard inquiry is why so many people advise you not to check your credit score, because fully pulling your score could result in a hard inquiry, and that would drop your credit score. But by checking Credit Karma, you're not doing a hard inquiry, so you don't have to worry about that. But this only makes up 10% of your score, so it's more than offset by the improvements to your credit utilization, your credit age, and your total accounts. With that being said, avoid any hard inquiries 9 to 12 months before you try and take out a mortgage, because you'll want the lowest interest rate possible at this time, so you want your credit score to be as high as possible. Checking my credit score has now become somewhat of a game to me, and now that I know the rules and how to score, it's become way more exciting. I hope this video helped you understand one of the more confusing topics we have in the financial world. If it did, please like the video and subscribe to my channel where I do personal finance videos like this and weekly stock recaps here. Thanks for tuning in.